right, let's jump right in. Today, we're tackling a really big question with this explainer on the Modern Wealth Playbook. We're going to ask something that might feel a little controversial. Is Warren Buffett's legendary strategy, well, is it still the right one for you today? And that really brings us to the core of this whole thing. I mean, could the world's most famous investor, the Oracle of Omaha himself, actually be giving you the wrong advice for building wealth in the world we live in now? It's a bold question, I know, but it's one we need to explore. So let's get right to the heart of it. First up, we have to ask, is Buffett's way outdated? We're going to re-examine what the path to financial freedom really looks like in the 21st century, and you'll see it might be totally different from when he was starting out. To really get this, you have to compare investing back then versus right now. Because honestly, it's like a tale of two completely different economic worlds. I mean, this slide just lays it out so clearly. Buffett built his entire fortune in an economy of tangible stuff. Things you could see and touch, like factories, manufacturing plants, and commodities. But today's economy, it's a whole different ballgame. It's driven by intangible things like technology and high-growth digital assets. And here are the perfect examples of today's wealth engines. We're talking about companies like NVIDIA, which is basically building the backbone of the AI revolution, and totally new asset classes like Bitcoin and Ethereum. And let's be honest, these are the exact kinds of investments Buffett has famously steered clear of, often saying he just doesn't get the technology. So, this huge shift from the physical to the digital world, well, it brings us to the core problem with that classic slow and steady approach. We're going to dig into why Buffett's absolute favorite tool, compounding, can actually be a trap for some people. So just to make sure we're all on the same page here, compound interest, right? It's that beautiful, powerful principle of earning returns on your returns. And for decades, it has been the absolute cornerstone of investing. No question about it. But, and this is a big but, here's the catch. The source material for this uses a perfect analogy. Compounding is like growing a pine tree. It takes an incredible amount of time and patience. We're talking 10, maybe even 20 years before you start to see those really big, significant results. So this is the million-dollar question, isn't it? If you're just starting out, maybe you don't have a lot of capital to invest, is that average 7% annual return from the stock market really enough? Is waiting decades for that pine tree to grow going to get you the freedom you want early enough in life to actually enjoy it? For a lot of people, the answer is no. Okay, so if the old way is just too slow, what's the alternative? Well, that brings us right here, the Modern Wealth Playbook. And it's a completely new strategy built on two key ideas, acceleration and compression. At the heart of this playbook is a concept called time compression. And it's pretty radical. Forget the traditional 40-year career marathon. This is about taking all of that intense focus, all of that high-risk, high-reward effort, and compressing it into a much shorter 4-year sprint. And what's the point of this sprint? It's simple, really. The goal is to make a breakout leap while you're still young. You're not looking for slow, tiny gains. You're channeling all your energy into high-leverage skills, or maybe a startup, to build a serious amount of capital, and to do it fast. Now pay close attention to this slide, because the order here is absolutely critical. See what's different? Step 1 isn't start compounding. It's accelerate capital first. You build your skills, you grab those high leverage opportunities, and you create that initial nest egg. Then, and only then, do you move to step 4, using traditional compounding to protect and scale the wealth you've already built. The entire playbook is basically flipped on its head. You might be sitting there thinking, okay, this sounds interesting in theory. But the truth is, there's evidence all around us that this isn't just a new strategy. It's a reaction to a changing world. The financial rules themselves are literally being rewritten as we speak. Let's look at a really concrete example, the proposed Genius Act. This law would target stablecoins, the cryptocurrencies designed to be like a digital dollar. It would force them to be 100% backed by U.S. government debt. Now, just think about that for a second. It basically turns New World crypto wallets into reserves for Old World U.S. debt. This isn't some small tweak. It's a massive signal that the global financial world is undergoing a huge shift. Okay, so let's bring it all home. What does this all mean for your path to freedom? Well, in this last section, we'll see it's really about applying the right tools for a brand new era. So what's the real takeaway here? I think this quote sums it up perfectly. The kind of discipline that Buffett has, that's timeless, that's incredibly valuable. but his specific tools shouldn't just be applied blindly to a 21st century world that's playing by a totally different set of rules. Let's just reframe the whole journey one last time. The old path was a slow 40-year marathon from the day you started. The new path we're talking about? It's more like a 4-year all-out sprint to build your foundation, followed by a marathon to protect and grow it. See the difference? You still run the marathon, you just give yourself a massive head start. And that really leaves us with one final question for you to think about. The slow path is safe, it's proven. And for some people, it's absolutely the right choice, no doubt about it. But when you look at your own goals and you look at the world around you, is it really your path to freedom?